Hello and welcome. This is a very interesting topic, the S&P ratings and Moody's rating and Fitch ratings. So what uh, these are the three top credit agencies who provide the ratings on the debt instruments. For example, like let's for the simplicity, let's say bonds, right? So either the the money raised by two ways, right? For the corporation, usually they raise the money by the bonds or by the stocks, right? But there are other entity as well. For example, even the government, sovereign, right, and the municipalities, right? They or provincials, they all issue. They won't issue. They all issues the bond, right? So those are the issuers, right? Different broad categories. And in my channel, I also have very detailed uh, elements on the bond. Feel free to check it out. It's called defining fiscal income defining elements. Okay, so when the issuer comes up with the bond to raise the money, let's say the issuer comes up with 100 million, right? And the issuer come up with a prospector. One of the sections required in the prospector is for the investor, they go to these one of these company, or right, to say, okay, how you rate this bond. So if these agencies pretty much rate the bonds in with these codes, but the broad categories, it is divided into two: the investment grade or the non-investment grade, right? These are the one. So in the, if it's a non-investment grade, right, or it can have a high yield bond or a junk bond, it's pretty much meant the same things there. What, how it's distinguished between these and this, the two parts. If it's an investment grade, this means the possibility. So how, as an investor, we try to see this, right? If we want to go and buy this bond, so if we know that's an investment grade, we know the chances of default for this, or the who is issuing these bonds is, the security is less, right? So that's one thing. But the second thing is, uh, the more, so that's on the investment grade part, and on the non-investment grade the chances are a little bit higher. So how the probability works, the odds is of default is higher as long as we go lower and lower with these ratings, right? So the triple A is the highest rating and the C is the lowest rating. If it's on D, this means it's already default, right? So that's not good. Okay, so now how, that's the pretty higher one. In terms of the return on the bond, how it is that if it's the investment grade or like a triple A, usually the return is the interest on the bond is lower, but as the odds of default is keep increasing, the issuer is also start giving few more interest rate. So that's why sometime investors, they think, okay, the future of the company looks good, so rather than going on to the very very high on investment grade, they might come on to the triple B, right? This is the line. So if anything below then this one is the junk bonds, right? So they come here to collect the interest, or maybe they stay here. So that's in general. Even in investment grade, it's further divided into the high, upper and low. The idea is same, right? That this is the best quality, right? uh, no default. This is can be have some chances of default, and this is on the lowest quality but still on the investment grade. And same thing here, this is on non-investment grade. This is very high speculative, and then this is huge on terms of a risk, right? So the more lower we go, the lower chances. Now how these ranks, so pretty much these naming conventions or these codes, right, by these three different companies, Moody's, S&P and Fitch. If you want to compare between the ranking from for Moody's and let's say S&P, the if Moody says on the same bond is AAA and S&P says, it means this is equivalent to AAA on S&P, and Fitch is AAA, right? It's just a different way of saying the same rank. So if the Moody says Baa1, and this means it implies S&P triple B plus and Fitch triple B plus. So that's just the name. Okay, there are a couple of things which I like to mention. In default, as we know, in Fitch and S&P, Fitch says 3 times D, but S&P is not that granular, right? So it says default means D, or in Moody's C is already default. So that's how it's been read. Okay, on the next, let's see the historical default rate, right? So this is on the municipal bonds, this is on the corporation's bond, right? So let me hide this one. So these are in percentage. Okay, so as you can see, the municipal default rate from the is 0%, so because of very high quality. But if I come to the and this is on the, if I go to the overall investment grade side, is only 7%, 0.07% the investment grade side default rate, but still some, right? But whereas the non-investment grade is 4.29%. If I come same to the corporation side, it is 31% default rate on the non-investment grade, where S&P comes up with the historical stats on 42% default rate. So this is how the historical shows about the data. So as an equity investor, right, we already know that the bond, after paying the bondholder, if the issuer is already default, right, on the bond, how they can going to pay on the equity. So it's also very important to see, okay, how their bond ranking is going on. For example, let's say GM stock. GM also, in the recent, when I did the stock value analysis of GM, I found that GM raised a huge amount of unsecured debt, which is pretty much comes here on the non-investment grade side, right? So that's a risk to, and it's a huge amount of tax, and that's a risk to the equity investor as well. Okay, so hopefully that's it from this video. Hopefully you like it, and happy learning, and give a thumbs up and subscribe to the channel, and let me know if you want me to cover any other topic in future. Thanks for watching. Bye for now.